Hello guys, welcome once more to my channel. Today I'll be taking you guys through another trade recap on GBPUSD. This trade was taken in the 5-minute time frame, but first of all I have to start the analysis from the daily time frame. So before taking a trade, it's actually a long process of preparation and analysis. So starting on the daily time frame, you guys can see clearly price had been making a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So it created the last higher high. Our expectation is for price somewhere around here to react to create another higher low. This higher low simply because there's another 1 week. There's another 1 week supply zone here which can mitigate price can push up to this zone to get mitigated and to sweep these liquidities which are found here before dumping. That is our bias. But obviously before price comes here, it might not come directly. As I always tell you guys, the past price action provides us with enough information and enough market behavior which we have to use in our present analysis to predict market direction on the long term or on the short term in the future. That is, information from the past are brought into the present to be used to predict price direction for the future, be it for the future in the short term or in the long term. But presently, on the long term, I'm expecting price to continue to sell downwards before providing maybe a reaction here within this 1 week demand zone upwards before dumping. So on my long term, this is what I'm expecting. A reaction around here to mitigate here, to come down here. But before that happens, remember price within a daily time frame, price will always be consolidating before going down. It has always been consolidating while going down. That is it. Within this consolidation, there are opportunities for short-term buys and short-term sales. So what I was expecting is to be able to spot an opportunity because obviously this daily candle closed above here. With this week we saw a reaction. This reaction for me I think came from this zone which got broken, which people call the support level. So because of this rejection here, because what we saw a week here which got rejected, another week is being rejected. So I have to scale in to the 4-hour time frame, and upon scaling in on and on and on, I was able to identify a demand zone and I was able to identify demand zones, two demand zones where price got this reaction from. And since my main focus on trading is demand zones, I focus more on demand zones and supply zones. That's the concept of my trading. So since I saw a reaction here, obviously this price reacted from this demand. I need to highlight it somehow. So price reacted from the demand zone, and but the demand zone did not hold. Price broke below the demand zone, so I'm definitely canceling this demand zone, guys. So yeah, price reacted from this other demand zone and went up. And upon going up, we can clearly see a structure here was broken. We are still on the 30-minute time frame, so let's go to the 50-minute time frame to have a clearer view. Okay, guys, you guys can clearly see price had been creating lower low, lower high. How do we do that? Price had been creating lower low, lower high, lower low, lower high, lower low. Price reacted here, and we saw a reaction which was able to push price to the upside to create a change of structure to the upside. Okay, guys, that became interesting. That became interesting. We got interested in the market. And before I continue, let me give you a insight. Let me give you guys a insight of my system, my trading strategy. My trading strategy is very simple, guys. Once once there was a previous demand zone or a supply zone, depending if you are looking for a buy or sell. If you are looking for a buy, for instance, and there was a previous demand zone that was created at a certain point in time, and price started selling downwards, creating lower lows, lower high, lower lows, lower high, lower lows, lower highs, lower lows, lower. Once price reacts within this zone and change structure to the upside, we're expecting price to come back to another demand zone here, which could be formed in a lower time frame to give us that buy upwards, to be able to give us that buy upward. So this is how my setup is going to work. Simply put, price had been selling, came into a demand zone, got a reaction, and structure was changed here. We saw a change of structure to the upside. As this structure changed to the upside, we're expecting that price should come back and give us a reaction to be able to enter the trade and take a buy. But there must be an order block sitting around here within a lower time frame. Yeah, once we are able to spot this order block, we wait for liquidity to be taken out here, and then we enter a trade to target the nearest point of liquidity. That is exactly what is happening here. So exactly what is happening here. Okay, price came in, created this lower low, lower high. Price then broke structure to the downside, entered this 30-minute demand zone, brought in a reaction which changed structure to the upside, telling us there's a potential for a buy. Telling us there's a potential for a buy here, guys. There's a potential for a buy here. So based on this, we're expecting price to retrace back to a demand zone. Here we're able to identify a 5-minute demand zone and a 15-minute demand zone. So now we have two demand zones. How do we go about taking it straight? Sincerely, I risk 1% per trade. It means I have to risk 1% here and 1% here, and that will be 2%. That is, if I lose this trade and I lose the trade, I would have lost 2% per trade at that time, and that is not part of my system. So what do I do? Okay, there's another possibility. You might decide to wait to look for another change of structure within the here. Since this is a 5-minute order block, you might price might react here. You scale again down to the 1-minute time frame to look again change of character before entering the trade. Or you okay, this very setup as it's coming down, you look a change. This is a change of character. For example, here within the 1-minute time frame. Yeah, you can look for the change of character and wait for a retracement within the 1-minute time frame to take the buy to go upward. Or in another sense, since it has already happened here, what do we do? What did I do? I said instead of risking 1% per trade, I'll risk here 0.5% and I'll risk here 0.5%. So I did set two buy orders, so that if price comes here, we enter the trade. If it hits our target, fine. If it takes us out, we'll be losing 0.5% instead of 1%. Then it comes in here, we take another 0.5% to target again here. Then if it goes, we're in profit. If it doesn't go, we'll take a loss. But altogether, we would have lost two trades with a maximum loss of 1%. So, unfortunately, um, price was able to react here in our first entry, but I have to scale to the 5-minute time frame so you guys should be able to see clearly the order block. As you guys can see, this is the order block here that was formed. So price reacted here, and guys, remember everything I said in this concept is there. See something? Price came down, broke structure to the upside, telling us there's potential for price to buy, and started retracing here and gave us a liquidity. No matter the form of liquidity, it gave us somehow it gave us a liquidity, and there must also be liquidity sitting above here. There must also be, so there must also be liquidity sitting above here, so that once we are taking a buy, we know that we are targeting the earliest point of liquidity. It's exactly what I did. Price retraced coming down. We saw liquidity created in the form of Asian high and Asian low. This is the Asian high and this is the Asian low. This is the highest point at which in which price did move within the Asian session, and this is the lowest point in which price moved within the Asian session. And based on past price action, based on the information from the past, I have noticed that price always do its best to take out the Asian high and the Asian low within the London session or the New York session. So based on that information, I brought the information in the present to be able to predict the direction of movement of price in the future. So in the present, based on information from the past, I said if I enter a trade from here or from that other block right below, since the Asian low has been taken, if I enter a trade from here, there's a possibility that price will fight within the London or New York session to go out and take the Asian high also. And that's why my take profit was here and my entry was here. So thanks guys. That was the simple concept which I used. And coming back to this diagram which I drew, you guys can take a screenshot. This is the simple concept in which I use. This is the only simple strategy which I use. I always wait for market structures to shift from either buy or sell, and after wait for a retracement to take out liquidity and to mitigate my order block, and I enter my trade to target the liquidity on the opposite side. Thanks for watching guys. Stay tuned to my channel, and I'll continue to be providing more trade recaps on trades which I take, and you guys will understand with time how simple my strategy is. Subscribe, like, comment, and share. Thanks. Stay safe and stay blessed.